Good morning, it's Harvey Jackson. Just going to get into some of the news here. Canada slips into a recession. Even CBC acknowledges. So, the corruption broadcasting corporation does, admits it. So, the other part of the news is there was no deal signed to open up the strait and stop that conflict. If anything, the Israelis are leaning in to even get more friction to try to get rid of Hezbollah in Lebanon. And that's not going to make it any better. So a technical recession is when you have two consecutive quarters with negative GDP. Look at that. Imagine, I think everybody's feeling it, but here, the Liberal Broadcasting Corporation or Corruption Broadcasting Corporation is admitting it.
Canada's economy has unexpectedly ground to a halt and slipped into a technical recession. New numbers from Statistics Canada show GDP shrank in the first quarter of the year at an annualized rate of 0.1%. That's not much, but it does mean a second straight quarterly contraction, which meets the definition of a recession.
You can see there that there's 3 out of the 4 quarters since Carney's been in. We've been in negative GDP growth. That probably doesn't bode very well for him. I thought this was just interesting, just looking at commodities in general, but way too many of the grains and everything else are down here as far as negative. But anyway, I just borrowed that from X. Managed money, changed positions. Record long was back on May 5th, and we're reducing positions since then. And you can tell, especially when you got corn and soybeans not really doing anything, the market is pulling back. Oil rises as Iran and U.S. Trade strikes. Israel moves further into Lebanon, like I said earlier. Israel is leaning in, and that's what's making probably Trump not sign anything as well, because he's under the thumb of the Israelis there to gain control there. You can see the Alberta is getting some weather, and it seems to be going backwards there, but there's some showers that landed across the Manitoba, southern Manitoba. Not a lot, but some, and where it's well needed. This is just the past 3 days, so you can see that there has been some moisture, and basically across the U.S. in that area. And this is the 7-day forecast, so you can see that there's going to be some substantial rainfall in Alberta and eastern part of Saskatchewan, still leaving a lot of the area that needs to move on in planting in Saskatchewan, hopefully still giving us an opportunity to finish this week. Corn Belt, just the amount of moisture where we are, it is in a deficit for sure. You can see that for the growing season, we are not. We're 0.63 of an inch anomaly lower than the average. That's just something that I'm getting from the weather service that I pay for. Soy oil, you can see since basically the start of the war, it's rallied close to 30%. Canola has moved 11% up, and palm oil 6%, and soybeans a whole 2%. Just as we look at the market here, canola is up $7.20 at $779.90. Rapeseed is also up, but only fractional, $0.75 at $5.25. Soybean oil is making new highs at $78.15. Palm oil basically flat at 4,470 ringgits. Crude oil is back up $3.30 at $90.69. Diesel fuel is still down as I took the snapshot. So inventories must be okay, and you don't always get hard to find those numbers. Soybeans are up 5 cents at $11.91. Spring wheat is up a penny, and your hard red winter is up 5 1/4, and your Chicago is up 3 1/2. Milling wheat is just down $0.75. Corn is basically flat, and the Canadian dollar is back down 72.40. Quick look at the market here, so you can see the breakout actually happened on July. Now it's on the 3rd day. So Thursday it broke out. Friday it went down. This morning it's going up, and that's based all on the news that there's going to be some sort of resolution to open up the Strait of Hormuz. European rapeseed keeps bumping its head on, and it has not broken out higher yet, that one. Soybean oil breaking out on the front month here, And I just put this in here, so if you want to take a pause here. So right where we are takes us all the way back to early part of, or the later part of 2022, high at 78.53, and that's currently where the market is trading. And if we were to look at what was the canola trading at that time, and you would have to look this way. So the canola at that time was trading 8.80. And if we were to go up another, let's call it 5 cents, and I just went into the range, you'd be, we had traded in 22 when we had a very small crop above the $1,100 canola. So here we are right now, and here we are right now. We're currently trading 770. Uh, the last time soybean oil was here, we were trading 880, so $110 higher. Soybean futures trading above that support level, but it's wavering there. This is the November contract, of course. The front month is not trading, breaking out new highs. Here's your crude palm oil, basically still stuck in that wedge going down. Crude oil, green candle today. We'll see if there's going to be more talk about this resolution here at all. Your Brent and your New York Harbor diesel fuel still got pressure going down. Gasoline is actually green today. Quick look at the markets here. So Canadian dollar had that big run down, a strong positive day on Thursday, and then the GDP release is not going to allow this market to actually get a whole lot of steam in the Canadian dollar. The economy's faltering. The S&D and your NASDAQ are just going on fire here. Quick look at wheat. We're breaking lower than our low that we made in the middle of May. Not a good sign. We're up against our 100-day moving average, and same thing with the December contract. We're up against that 100-day moving average. Trend is still down. Same thing with the Kansas and the Chicago. Milling wheat has never broken through any resistance this year, and pulling back here currently as well. Corn breaking trend here as well. And on the